Hey, good morning, everybody, and welcome back. It is Saturday, and this is Multifamily Unplugged. Hey, I certainly hope that you're enjoying your weekend and that you had a productive week. And this is time for you to maybe do a little education, catch up on a few things, get recharged for the week ahead. So, Saturday morning here. Hope you have your coffee. I have mine as usual, and we are definitely in for a treat this morning. I'm excited about our guest, and we'll get to that in a minute. But one thing, I have started recently again. This is something I've done for years, but just recently started again. Is writing down on a daily basis in the morning when I get up and I have my morning routine. My prayer time. I go to the gym. I get intentional for the day. I write down the three things that are key for that day that I have to accomplish. And everything else just kind of has started to become noise to me until I get those three things done. And I'll tell you what, I did that for years. And I really feel like that, kind of kept me focused and kept me on a certain path and track of climbing up the hill. And I'm back doing that again. And I really feel after the last month or so of really focusing on those three key things on a daily basis, it's helped. So I tell you this because I think we all run in these cycles where we do something for a while, we get distracted, we lose focus on it. And then, I think it always makes sense to come back to it and start over again or try it again. So I'm going to encourage you as you move into the new week, you start to plan for, jumping back in and hitting the grind again, that you would, write down not only the three things you're grateful for, but the three things that you need to accomplish each day you get started. And I'd love to hear back from you on how that works for you and what that does maybe in your mindset or in your business to help you have a little bit of growth. So, hey, my guest this morning, Buck Joffrey. Buck's from Santa Barbara, California, a little ways north of where I'm at. Has a podcast called The Wealth Formula. They talk about money, they talk about personal finance, and that's what we're going to dive into this morning. So for all you real estate investors that follow me, that on whether on social media or you're here every Saturday, buckle up because we're going to get deep a little bit today on money and personal finance. So let me bring Buck in. Hey, good morning. How are you?
Hey, Mike. How are you?
I'm great. Thanks. Good to see you. Thanks for joining me this morning. I certainly appreciate it.
Yeah, it's been, thank you.
Yeah. Hey, listen, as I get started, and I always say this, I'm going to write a book one of these days called The One Word, because I always ask this question at the beginning of my podcast, and I have hundreds of answers. So I'm going to take the top, words that people say. But in one word, Buck, what best describes you personally and professionally?
Yeah, there's lots of words, but I think the honest truth is lucky. I think lucky is
Wow.
sometimes you can be good, but sometimes it's better to be lucky than good. A lot of times you work hard and things don't go your way. Things do go your way, and I think for a lot of people, the reality is, the harder you work, the luckier you get. So.
You think you've always been lucky, Buck?
Yeah, I do. I think I've been blessed that way. But I do think that there is that whole harder you work, the luckier you get thing I got from an old ice hockey coach because I grew up in Minnesota, and it stuck with me. And I think it's true. I do think that's true. You keep moving, things kind of there's something about continuously moving forward and having motion that puts you in the right position for you to take advantage of. Now, granted, you have to recognize that and you have to move forward when it does, but I think there is something value there, and I don't think it's just me. I think that you create your own luck. So,
Yeah. They say luck is leveraging upon common knowledge, right?
yeah, I think there's some truth to that.
Yeah. Well, it's good though that you're favored, guy. I mean, obviously God favored you and your luck shows up in your life, which is awesome. Hey, it sounds like you're a Midwestern guy like me.
Yeah. Yeah.
Why don't you tell us a little bit about your history, your background, and how you got into doing what you're doing?
So I'm a little bit different for this kind of thing because I started out as a physician. I was a surgeon, and at the end of my training, I read a Robert Kiyosaki book called Cash Flow Quadrant, and it's inspired me towards entrepreneurship. So I, right after training, is started my practice, but started it very much as a business type thing, and I had a fair amount of success with that. When I started making money, I started investing in real estate instead of really just kind of dumping money into stocks, bonds, and mutual funds, but some multifamily in the Chicago area, and had some luck with that, and wanted to learn more. So I started a podcast. That podcast ended up being called Wealth Formula. The reason I started that was there wasn't a lot of podcasts out there for guys like me who were already making money, who wanted to figure out what to do with it, and how to do it. And so I figured I'd just start my own podcast and I'd learn by interviewing people. And that's what I did. That
Mm.
was a decade ago. And it just grew. And from there, ended up realizing there was a lot of people who wanted to hear that message, wanted to even invest in real estate, started an investor group through my podcast, and ended up, being involved with quite a bit of real estate, a couple $1 billion of transactions, and yeah, that's kind of where I'm at. And so I continue to talk about things on my podcast. I think just mostly for education, people understand that as an investor, I think you really need to understand the economy. You need to understand the macro picture of what's going on out there. And you also need to understand personal finance in general. So that's what I talk about.
Yeah, that's awesome. Yeah, I think a lot of people don't have a real basic understanding of personal finance. I remember years ago Zig Ziglar talking about that financial education should start in the third grade, and he was a real advocate for that. And I don't think anything's ever really changed because you certainly, other than learning 1 + 1 = 4 in school, you know, you don't learn a lot about finance.
Yeah.
So,
Yeah, absolutely.
hey, here's what I want to ask you though. You said you did a real estate deal or some real estate in the Chicago market. Talk a
Yeah.
little bit about that and what you did there.
Well, this is when, I just started making some money, and I started thinking, well, how do I invest this? Because this is the first time I ever really made any money. It just so happens that my dad is now 86, 87 years old. He was an engineer early on, and jumped into real estate, started buying single family homes back in the 60s. And that's what he did for a living. And so for me, just looking at like, what do you do with money when you make it? Like most families, they don't have a roadmap. For me, it was the roadmap was, well, you just buy real estate. That's what you're supposed to do. And so I started looking out in the Chicago area because that's where I was located. I found an area in Chicago that was sort of up and coming, about over the course of 3 years, about like three buildings, not big ones, 6, 7 units, 8 units,
Mm.
that kind of thing. And remarkably had a lot of success. And in this situation, it really was luck because, yeah, I mean, I made some improvements, but I ended up into it in an area that seemed to just kind of take off after a few years, and ended up doing really, really well with those buildings after a course of only 4 or 5 years. And yeah, it was a good start.
Yeah. And I have to ask, I'm curious, what was the neighborhood? What neighborhood?
Yeah, this is like Little Village, back in and when I was buying there, it just started to gentrify a little bit,
Yeah.
and I got in there right before that, and before you know it, and I don't know what it's like now. Honestly, it's been years, but and maybe it's still not great, but something happened that pushed those prices up, and and that was a situation where, there was a little bit of luck there too.
Yeah.
All of a sudden, the local hipsters wanted to live there instead of, these, um, little Mexican families that were in there before. So, prices go up, and then it ends up being kind of a good situation.
Yeah. Little villages really taken off for sure. Yeah, I think it's interesting. Chicago would be a great market, and I'm not, I never really get into politics, but based on the fact that it's a blue state, and
Yeah.
you've got Cook County, but then you have Chicago Cook County, and then suburban Cook County, where Chicago Cook County, the landlord laws are so much tougher.
Yeah.
I've never liked owning real estate in the city,
Yeah.
and I've only owned one apartment building in the Chicago market. Everything else was, I always tell people, I say I grew my portfolio from the coach seat of an airplane,
Yeah. Yeah.
So,
Absolutely. I
um,
mean, yeah, I agree with that. I try not to, I don't buy anything in blue states anymore. It's too difficult. So
yeah, yeah. So, hey, so let's chat a little bit about money. Tell me, your podcast. What do you guys talk about? What do you like people? What do you like to teach people? What do you think people need to know or learn?
I think it's really important to know where, as Wayne Gretzky said, where the puck is going, right? And in order to do that, you kind of have to understand the big picture of the economy. You can't. These are not when things happen. They don't happen by chance. There are signals out there that you understand what's going on. Like, for example, I mean, as you know, 22, 21, 22, 22, 23. These are very tough years in real estate because of uh, interest rates going up as high as they did, and how quickly they went up. Um, caught a lot of people off guard. I mean, it caught me off guard too. Um, but there were some people who kind of just saw it happening and were able to get out quickly. You know, um, that is because they understood what was happening in the economy, that there was a flood of money there, and that the inflation, even though the Fed was saying it was transitory, was not. Now, similarly, now, if you look at what's happening, I would say that, in my view, um, I think most people would agree that the multifamily market is really depressed. We got crushed. And what's going to happen now? Well, multifamily, as real estate in general and a lot of other asset classes, depend very much on, again, on interest rates. So, which way are interest rates going to head? We have this Iran conflict right now, which has created a little bit of a blip because of, the cost of the price of oil and everything is going to bring inflation up temporarily. But the backdrop is that we are living in a very unique economy where artificial intelligence is becoming an enormous, enormous variable. And artificial intelligence is very much deflationary. And so, if you look at what was happening before the Iran conflict, with real time inflation data like Trueflation, things like that, every month inflation was ticking down. It was deflationary pressures. And what I anticipate happening over the course of the next few years is that rates are going to come down because inflation is going to continue to tick down. And what that means for real estate, again, if you're positioning yourself, is that real estate prices should go up, because we know that real estate prices are very much dependent on interest rates. So trying to again look at now where we're at right now, because I think a lot of people are afraid to buy because it's been a lot of people got hurt. But if you try to put into perspective, you're not buying today for what's happening tomorrow. You're buying for what's going to happen in the next 3 to 5 years.
Right.
Then you're much more. And you're not going to always get it right either, right? But at least you're looking at it through an educated lens and saying, this is where things are headed. And therefore, 5 years from now, I want to be a net seller, not a net buyer, a net seller. So how do I do that? Well, I have to own something now. So I think that's where, in my view, the importance of understanding macroeconomics is, it's absolutely critical to be a successful investor.
Hey, I had to write a couple things down.
Sure.
First of all, I loved what you said. You're not buying for today. You're buying for what's going to happen in 3 to 4 years from now.
Right.
And it's funny. I laughed when you said about Wayne Gretzky because I just put a post out on LinkedIn yesterday where I said, Wayne Gretzky always says, go to where the puck is going. Don't go to where it is. So I thought that was just classic. I was going to ask you, where do you think the market's going? But I think you've kind of already clarified some of that. And, there's no doubt our opinion is the same. I do want to ask you about this Iran conflict, though.
Yeah.
Do you think it's going to hurt us or help us in the short term and the long term?
Yeah. So in the short term, obviously, it hurts us, right? It hurts us because oil prices go up, CPI, inflation goes up. It's not just about oil. Oil is involved with in many of the products we use every day. So prices go up. But you bring up a good point. Does it help us in the long term? Well, if we're able to get to a point where we control more of the oil supply, then it helps us fundamentally, right? It helps us if there is a change in regime, it becomes a more Western or American friendly regime. It absolutely helps us. And I suspect that's kind of what the Trump administration is thinking. They're thinking short term pain for long term gain.
Mm.
It's not you see a similar pattern in Venezuela as well, right? Venezuela has huge amounts of oil reserves. Why do we go in there now? Because of oil. That's why we did it.
Yeah.
So if we can bring these costs down, oil and energy costs long term, that just contributes to our own, economic success because of our ability to control energy prices.
Yeah. I saw I saw a couple of Facebook or Instagram posts here over the last couple of weeks, and it was the last 5 presidents, each in a little clip, saying how they've got to do something about Iran, right? And I think finally somebody stepped up to do that, and I agree that there's going to be some long-term gain for it. I don't think that Trump does anything without he not just off the cuff, but is doing something for the future. Whether you like him or hate him, he
Yeah.
he's definitely has our best interest at hand. I
Yeah,
believe.
I completely agree. There's a plan. And again, whether you like him or hate him, the one thing that you can say is that he is making things, trying to change things. And we do need that. We do have to change some things, right? We
Yeah.
continue down the trajectory we were going down. And, again, people may not like the politics. People may not like him personally. But there is an objective and there is a purpose behind all of this at the end of the day. And he's got some really, really smart financial people in there. These are no dummies. And probably some of the smartest, uh, you know, uh, some of the smartest people in private industry are in there working in the government, which we really haven't seen as to this degree before.
Right. And that's always been, some of the opposition's resistance is, these people aren't politically, in tune. But so I have to ask this, because I'm interested in what your answer would be. But the dollar,
Mhm.
There's all this talk and has been talk about us going to one world currency and
Yeah.
fiat, and you know, what's your take on that? I kind of want to caveat with, is the things that are going on, and the war, and some of the planning, and some of the moves that the current administration has done. Do you think that's going to help strengthen our dollar? Because I have an opinion on this, but
Um, here's the thing is that I think the dollar, in my opinion, there's no question that there's going to be an ongoing debasement of the dollar, right? I think the dollar, as we continue to print money, as we continue to, go down this road, I think the dollar continues to lose its value in general. So, from a personal uh, finance perspective, what does that tell you? What do you need to do? You need to like get out of dollars and put your money into assets, right? Because what value is lost in the dollar is gained in the asset, whether that's in stock market, whether that's in real estate, et cetera. I mean, it's what inflation does, right? Um, but I think in the bigger picture, I think sometimes people get a little paranoid about the dollar and its role in the global arena. I mean, there's not really a replacement for the dollar. I think that's the thing that people get paranoid about, that there's some sort of zombie apocalypse, and all of a sudden the US dollar is meaningless. That we are so dominant, and the rest of the world is so uh, dependent on us, as it continues to be, for safety, for
yeah,
the rule of law. I mean, when things go badly, the money flows to the U.S. and in the I don't see that changing anytime soon.
yeah.
And the amount of money that's invested in the United States from foreign governments is, it's yeah. Is it changing? Is it becoming a little bit less? Well, yeah, but I don't think that's something that we need to sit around and worry about all night long. I just don't. I think that's a big paranoia. That being said, again, from an individual investor perspective, I do think it means getting your money out of cash and putting it into something that is going to grow,
Yeah.
and that's important. So I think, the dollar debasement, uh, I don't know if you call it theory or narrative. I think that's a very real thing. Almost no economist I talk to on the show does not believe that that's happening, right? So everybody believes that's happening.
Yeah.
So you just have to, yeah, again, you have to move accordingly to that.
Well, I don't think it's just the government that moves money to the US, but I think there's individuals too.
Right.
We're seeing a lot of European money come in. We're seeing a lot of China money come in, in the multifamily space,
Yeah.
from individual investors as well as large groups. And uh, I think that they see the strength in the US economy,
Yeah.
and maybe I back up and just say I think they see the potential strength coming back, because I think there was a time that got weak, and now we're being looked at as that strength again.
Yeah. I think that's true. I mean, I don't, I think that, again, the narrative in the big picture of the U.S. leaving its position of power. I think that's just not reality. I think we're actually probably moving into the next phase here, where I think we become even more dominant because of our companies, because of our GDP growth and everything. So
Yeah. So the other thing I referred to in the beginning is that you talk about personal finance, and I find right now that a lot of investors, the last couple of years, in multifamily, they got wounded.
yeah,
Capital calls, deals went sideways, distribution stopped, deals fell apart, investors lost capital. I
Yep.
think investors have been licking their wounds, for months, and some, some are broke as a result of it, but some are, still sitting on the sidelines hoarding some cash. You know, what would you tell them today?
Yeah. I think there's a when there's blood in the street, is that's when you, even if it's your own blood, that's when you buy, right? That's the idea. And I think, multifamily was a bloodbath, you know. The other markets have not really declared, they haven't declared that. I mean, the equity markets, the stock market and stuff didn't have that kind of
Right.
thing. We did in multifamily. And I think the key is, again, to go back to the fundamentals. What's happening? What's the big picture? And the big picture is you had a market that got killed, and we can identify why that was. It was because of interest rates. That's why it was. And then you have to say, what's going to happen with interest rates? Well, interest rates are going to come down. They are going to come down. If you look at even Kevin Warsh, the Fed nominee, Trump's new Fed chair nominee, he is singing that same tune. He is talking about how the artificial intelligence is inherently deflationary, and it's coming faster than people recognize. And so I mean, he's been talking about bringing rates down substantially. Um, and so listen, the Trump administration is all about bringing rates down. Kevin Warsh is all about bringing rates down. Real time data before the conflict was showing inflation come down, just like that narrative is all about. So if you believe rates are coming down in the next 3 to 5 years, you should be buying now.
Yeah. Yeah.
There's also
Um,
deals because of I mean, we're in my group. I mean, we are consistently, buying assets, large assets in, Charlotte and Phoenix, and where they're down 30 to 40% price from 2022.
yeah.
I mean, if you look at it from the big picture, as someone who didn't get kicked in the, kicked in the head from this whole thing, you should be like, wow, this is one of those situations where you look back and say, gosh, I wish I bought back then. Well,
Yeah.
we're in that then right now. It's just that nobody recognizes it when it's there.
Yeah, I've been in the business 30 years, and I've always said, boy, if I could just get in just before that market changes, not when the media says it's changed, but before that happens. And that's right where we're at today.
Yeah.
You said it. I mean, I'm underwriting multifamily and a couple other asset classes, and I've seen prices reset. I think that you're right. We're down 20, 30% in some things. And we're underwriting some deals that I think are going to really make sense. Maybe are questionable today going in, but really going to make sense. And there's a lot of product coming to the market that is um, uh, really distressed. So I underwrote a deal last week, 118 units in a primary market that's boarded up that we can buy for like 30,000 a door. And
Wow.
it's a gut rehab, but our basis going in is still under 90 a door. You're well below replacement cost. And the return on an asset like that is, we're all in at 10 million. Our exit in 5 years is 17.
Yeah.
So I mean, it's, there's those types of deals out there today. So,
Yeah. And again, the key is, to be greedy when others are fearful, like
yeah,
Buck does, right? I mean, that's where we're at. The people are fearful. There's no doubt about it. And
yeah,
but again, you go back and you've been in real estate longer than I have. And how many times have you seen this where everybody wants to jump on the bandwagon when there's froth in the market, And if if you point that out to everybody today who's listening, they're going to be like, "Oh, that's silly. Why would you do that?" Well, that's what everybody does. That's what everybody
Yeah.
does, right? And
Right.
we're right now we're soaking in our own blood, and nobody wants to, not nobody, but a lot less people are interested. You know?
Well, it sounds to me like you're telling people to get back in the market,
Oh yeah,
and
yeah,
look forward. Stop looking at today. I love your comment. You're not buying for today. You're buying for the next 3 to 4 years.
yeah, absolutely. And I think and for us, it's real estate, but in general, I think the key is just don't sit on this money right now, right? Like even
Yeah.
if you're going to get into, maybe there will be a correction, the S&P 500 or whatever, but the long term here in 3 to 5 years, I mean, with everything going on in the U.S. economy and the debasement narrative, you've got to move your money into something that is going to grow rather than lose value.
Yeah. Well, Buck, I know at the beginning you said how long we going to record for, and I said about 20 minutes, and we blew right by that.
Oh,
So,
that's fine. Yeah.
but I appreciate your time this morning. Tell people how they get a hold of you if they want to hear your podcast or hear more from you. What do they need to do to connect with you?
Well, the podcast has been around for over a decade. It's called Wealth Formula Podcast, and with Buck Joffrey. So you can listen to it on anywhere that you listen to podcasts, anywhere you listen to this one, on YouTube, etc. You can visit our website at wealthformula.com. Some resources there, and yeah, always happy to have new people just listen to our message.
Yeah, thanks. Thanks for being here. Hey, I'm going to move you to the back room. If you'd hang out with me for a minute,
Yeah,
I'm going to say goodbye to everybody, and then I'll chat with you for a minute.
you bet. Thanks for having
Thanks,
me.
Buck. Thanks for being here today. I appreciate you and your support.
You bet.
Hey, everybody. I don't know if that was eye-opening for you. I don't know if that was too early on a Saturday morning to really get that, but go back and listen to that again because there is some depth there. And Buck said some great things, and and I'm going to say it again: skate to where the puck is. Wayne Gretzky said it. He was successful, and anybody who is looking for where that puck is going over the next few years is going to do really well. And the comment, and I just got to go back to it one more time, is you're not buying for today. You're buying for the next 3 to 4 years. And I want you to, if you're sitting on the sidelines, maybe it's time to have a conversation. But listen, if you want some more of that, you can jump on Buck's podcast, a Wealth Formula podcast. He's got to have some great content out there after 10 years. And remember, we're here every Saturday morning. I appreciate you. Please pass this on to somebody who needs to hear it. Follow us on social media, Instagram and YouTube. We're always bringing out some great content, some great ideas. I know this was a little bit different than normal, but that's what we like to do. Shake it up a little bit, right? Have a great week, everyone. And we will see you next week.